Happy New Year, Melonheads. Happy Friday. It is that wonderful time. I know what you're thinking. Stop. You don't have to say it. I know you're all thinking, nobody. Take it down a peg. Save some ladies for the rest of us. I get it. I'll be fair. Happy New Year, you guys. I'm just getting all set up. Got some friends coming over tonight to ring in the new year, all the possibilities that 2022 brings. Should I ruin their year for them ahead of time by telling them what's probably going to happen next year? No, don't be that guy, Jack. Don't kill the party like you always do, Jack, with your doom and gloom about the economy. I know, I do it all the time. I'm trying to be a little more upbeat, a little more uplifting in my commentary. We'll see. What's going on, Mike Bender, sir? I see you in the comments there. Happy New Year. Thank you very much for all the links you've been sending me, especially the one you sent me about stupid people. I got such a kick out of that. I was watching that with Mrs. Special the other day. That was hilarious, sir. I see Mr. Neil Hahn. I see Fat Vegan. I see Drunk. Mr. Drunk, sir. I see Benjamin. All right. A lot of familiar faces are in the chat. Thank you guys for joining me on Friday afternoon before the festivities begin. And speaking of festivities, I wanted to mention some upcoming festivities that you may have noticed on Financial YouTube as of late. And I want to talk about special night out with the Ninja and Co. in Denver, Colorado on January 8th from 4 to 8 at the Loaded Bar in Denver. It is an 80s rock themed lounge and bar in Denver, and I am so excited to check out this event. I am going to be there, probably not with bells on, and I will certainly leave my Happy New Year hat behind. But man, we got a great spread here. Just going through some of the names here. There's my man, the Ninja himself, Rob Keentz from Gold Silver Pros, Dave Kranzler from Investment Research Dynamics, Joe Brown from Heresy Financial, who I think I've mentioned it before. That's my single favorite channel on YouTube is Heresy Financial. I learned so much watching Joe Brown. He's just an excellent channel. My man Jim Lewis from Wall Street Silver will be there. Chris Taylor from Financial Fitness. I had a great time talking to Chris Taylor a couple days ago. We did a roundtable with the Ninja and with Mackie from Ironsides Ranch talking about fertilizer and possibility of food shortages next year. And who is this adorable yet ruggedly handsome fellow rounding out the bottom of the list? Well, we won't spend too much time on him. Anyways, folks, space is limited. So if you are going to be anywhere near Denver, I highly recommend you check this out. We will be there in person. You can come. We can just hang out. It's an informal setting. There is no cover charge to attend. The food and beverage sales at the event will cover the cost of the venue. So it is free to attend. And I hope I get to meet some of you guys. I hope I get to put some names to the faces that I see you guys a lot in the comments section. And shout out to my man, the Economic Ninja, for putting this together, for being this focal point that everybody is able to coalesce around. This is, a couple times now he's tried to set something like this up, and I really appreciate you putting yourself out there, Ninja. Here's a couple of pictures of the venue. Looks like a cool place. And it is right in downtown Denver near Union Station. And the address, 1941 Market Street. So I hope I see you guys there. Anyway, it looks like the comments are still just rolling in right now. Happy New Year to Big Ugly MF. I had to do a double take on that one. Hello, Dennis. Here's to a prosperous 2022. I hope so, sir. I hope for a prosperous 2022. Let us say that optimism is cautious, though, because, we'll talk about that in a little bit. I just registered. Look forward to meeting you and everyone. Don T77, that is awesome, sir. I look forward to meeting you in Denver and having a drink and having a chat with you guys. Hello, Cesare Yeoman. Good evening. And with that, I think we are going to Happy New Year. Thoughts on AMC, says Spin-Off Buckets. All right, my thoughts on AMC. AMC has been a tough ride. I am still deeply, deeply in the money on AMC. So I am holding it, although I have watched a lot of my gains tick away. I am still in the black on this one. I have not sold one single share of it. It just seems to be in the doldrums right now. I got some lines that I drew way back, and, we've broken down below that level. What am I on, a 1 month interval here? Let's put it on a 1 day interval. Trading below the 200-day moving average, not a good sign. All right, so the technicals on this one just look rather horrible. But again, the underlying thesis that this thing has been naked shorted just into oblivion, I think that is still intact, and therefore I am still holding my AMC shares. Again, maybe, does that make me a bag holder? Maybe, but time will tell, and I don't think this story is over yet. And I mentioned AMC and GME in my video this afternoon that I put out about the top 10 stories of 2021. I don't think we've heard the last of the apes. Let's just put it that way. I don't think we've heard the last. And, when the tide rolls out, when the S hits the F in 2022, as I suspect is going to happen, and if not in 2022, certainly in the following years, I think we're going to find out just how deeply naked short a lot of these hedge funds and market makers are on AMC. So, Spinoff Bucket Sir, thank you for the question. And with that, I want to get into, I got a question about the Fed balance sheet. Now, it was from Nicole Post. Nicole, I don't know if you are here yet, but you posted this one in my post earlier asking for comments. And I've seen a lot of talk on YouTube about saying the taper had not started yet. And Joe Brown did a video on this one a couple days ago. It may have been earlier today. I don't remember exactly. But here is the chart of the Federal Reserve's balance sheet, right? Now, the first thing I have to mention here, let's get me out of the way so you guys can see okay. I want you to remember what the taper means. The taper does not mean this chart is going to start going down. Okay, the taper means this chart is going to start to flatten off. It's not going to rise as fast. Okay, so the fact that they are still adding to the balance sheet does not surprise me in the least bit, because they didn't say they were going to halt their asset purchases. They said they're going to slow their asset purchases. So we're still going up. Now, it doesn't look like there's really been any big change to the trend in this chart, and that's leading a lot of people to say that the taper is a farce and that it's not happening. And then there's been even a little bit of steepening of the chart in these last week or two that has some people saying they're lying outright and that there's no taper happening at all. So I got into the numbers a little bit today, and what I had to do, you have to zoom way in on this chart and look at some of these numbers and some of the dates here. So what I did is I checked for November and December. I checked the beginning balance of the Fed balance sheet on November 3rd versus December 1st. Okay, and the difference between those numbers is $75.5 billion. Now keep in mind, we started out from a standpoint of a taper of purchasing at least $120 billion a month. All right, so they said they were going to lower their asset purchases by about $15 billion per month, and that was in November. So that would put them somewhere around 105 as their target. Well, they only purchased 75.5 in November, well below the 105 target. Okay, so for the month of November, it looks like the taper was intact. Now you can see we got a pretty nice step up here in December. Now the most recent data point showing for December is on the 22nd, and we're missing a week, but let's just start with the beginning number. The number in the beginning of December, on December 1st, was $8,650.4 billion. Okay, now this is on the St. Louis Fed website. Now I had to actually go into the most recent statistical release from the Federal Reserve. Let's make sure you guys can see. All right, here, I've got to move me over. And when you zoom in here, you can see total Federal Reserve balance sheet now stands at $8,741,648 million. Now, if you subtract those two numbers, you end up with additional purchases in the month of December of $91.24 billion. All right, so a couple of things about that. Number one, 91.24 billion purchases in December is an increase in the purchases compared to November. They only bought 75.5 in November, okay? So there was an uptick month over month in the Federal Reserve purchases. But I want you to remember, we started with a standpoint of 120 billion a month. That was the number that the Fed gave us. And then they said they were going to lower it by 15 billion per month for the following 2 months. Well, if you subtract 30 from 120 billion, gets you to 90 billion. And what was the number in December? 91.24 billion. So the Fed is right on target of their 15 billion per month taper. Now, they said at the beginning of December that the taper was going to step up to 30 billion a month, but that was not to start until January. So, at a pace of 15 billion per month right now, based on the December number, even though that's an increase versus November, if you look at where we started from back in September, October, we are right on pace for a 15 billion per month reduction in the purchase of assets. And so I would expect the number for January to come in somewhere around an additional 60 billion in assets, because they've said they're going to double the pace. So this is not an exact linear correlation, right? We had a big drop off in November and then a little bit of a tick back up in December, but we are still on pace for the 15 billion per month tapering that will now become 30 billion a month. So there's been a lot of other channels, a lot of really good channels, right? People I listen to and people I respect their opinions have been saying this is proof that the taper is a farce, that it's not happening, it's a big lie. It's not what the numbers say. And it really depends on how you look at the numbers. If you look at November and December, it sure looks like it was a lie. It was a farce, right? Because we saw an increase in the asset purchases month over month. But if you zoom out a little bit, we're right where we're supposed to be, just above 90 billion a month in asset purchases after 2 months of this 15 billion per month tapering. So the numbers don't lie, folks. They are tapering. All right. So I just wanted to throw that one out there. Now we've still got 90 billion to go, 90 billion per month. So there's a lot more liquidity is going to get pumped into the market before this is over. And then the rate hikes start. And that's where I start to worry, is the rate hikes, to be honest with you. I mean, right now they're suppressing interest rate by buying these assets. But man, when those rate hikes start, that's when you got to be careful, folks. All right, checking out here. Hello, Sarge. I have Happy New Year, my friend. In case we don't see each other later tonight, LOL. Who else we have? Adams 960, my first ever Power Hour live stream. Adams, thank you, sir, for joining. Welcome aboard. Hello, Nicole. I'm glad you're here. I hope you caught that whole segment about the taper. March will tell. If it's not zero in April, then it's all BS. Appreciate the breakdown. Yes, we should be done by the end of March, right? The new purchases. I mean, if they're really going to accelerate by 30 billion a month, January, February, March, and we're out. My big question is, are we going to get a rate hike at the end of March or in the middle of March? Would they move up the timetable? I mean, I remember earlier in the year, the markets freaked out when, what was it, in like June time frame, when somebody made a comment about the possibility of 2 rate hikes in 2023. And everybody freaked out, and there was this big price smash in precious metals. That was only a few months ago, and now we're talking about 2-3 rate hikes in 2022. So the Fed is on a tightening rampage, even though they're still historically dovish. It seems like week after week, month after month, their language is getting more and more hawkish. So who knows by March where we might be? That is still another 3 months out, and a lot can happen in 3 months. And, I mean, Powell has been known to pivot, the famous Powell pivot before, so we'll see what happens. Do you think that gold and silver will drop or rise when the rate hikes? Well, I can tell you traditional wisdom, Adams, is that gold and silver do not do well in a rising rate environment. That has been the conventional or the traditional wisdom, right? Because gold and silver yield nothing. They actually carry a small expense to hold them because it has to be guarded. You know, usually, at least for the wealthy, they pay for third parties to house it and secure it. So if your interest rates are going up, then suddenly your bonds are becoming more competition for your gold, because the bonds actually have a yield. However, those bonds are still negative yield. So as long as these bond yields are in negative territory, I don't think they're any real competition for gold and silver. As long as inflation stays high, as long as these yields are below the rate of inflation, I don't buy that conventional wisdom that rates are going to take away some of the attention from gold and silver. I really don't. The other thing I would mention is something that tends to happen in a rising rate environment, especially in years past, has been the market throws an absolute fit and freaks out. And when that happens, gold and silver perform exceedingly well. And with that, I want to bring you up to this chart. You guys, if you've been on my stream before, you've seen this chart before. Okay, I'm going to do a little quick refresher for people who are new here. This is my chart of the interest rate on the 10-year Treasury. And I want you to note this purple line here. Okay, this is the line representing the tolerance, the pain tolerance or the threshold that our economy can stomach. And it is a downward sloping line because the mountain of debt in all aspects of our economy has gotten worse and worse and worse for the last 40 years or so. And every time we get near this line, something in the economy breaks, right? We've got Black Tuesday. We've got the bond market crash in 1994. We've got the dot-com bubble bursting. We've got the global financial crisis here. We've got the Powell pivot and the Christmas Eve 2018 sell-off, followed by the unfortunate medical event that shall remain nameless. So every time interest rates get near this declining trend line, something in the economy breaks. And it's very painful. And let's just zoom in a little bit here for 2022. This chart is why I am worried about 2022, because right now that trend line is somewhere around 2.2, 2.3% on the U.S. 10-year Treasury. And if we get 2 or 3 rate hikes in the next year, that alone will put us right on this line. Never mind the taper and the Federal Reserve, the single largest buyer of U.S. Treasuries, exiting the market, right? Remember, interest rates and prices are inversely correlated with bonds. So if the biggest buyer of the bonds drops out of the market, those bond prices are heading lower, those interest rates are heading higher. If we get near this line, in my opinion, that is the everything bubble bursting. And we have an economy that is absolutely addicted to easy money. I did a video with On-Site Trav last night. It's posted on his channel. I really highly recommend his channel. Head over and check it out. That's On-Site Trav, one word. And we were talking about how we're basically drug addicts, right? The economy is drug addicts. The drug is easy money, and the drug dealer is the Fed. And they're going to take away the easy money, and they're going to start hiking rates, and we're going to start going through withdrawal. And if we cross over this line, we're going to crash. And the economy, the stock market is going to sell off. And when I zoom out, I see that happening every time for the last 40 years that we've got anywhere near it. And what the Federal Reserve is telling us they're going to do, they're telling us they want to pull a Paul Volcker, that they want to fight inflation like they did back here in the 1970s. You got to be kidding me. Back here, we only had about $1 trillion worth of debt at the federal level. Now, we've got almost $30 trillion in debt. What happens to the interest expense of that debt if interest rates get up here like we had in the 80s? Forget it. Can't happen. The government will be instantly insolvent. It would be just mayhem. And long before we get to that level, you'll start to see private companies going bankrupt. And look, we've got a lot of companies right now that the only reason they exist is because they've been able to roll over their debt year after year. As the interest rates went down, they take out new debt to pay off the old debt so they never have to pay it back. Well, when rates start to rise, you can't do that anymore. And then they start to go insolvent, and then they lay off their workers, and then spending goes down, and that's when you get economic collapse, and that's when things break. And keep your eye on that line, folks. If we get anywhere above 2% on the U.S. 10-year, and over time, I see my estimates coming down and down. I used to say it was going to be between 2 and 3%, and then between 2 and 2.5%. I don't think we get anywhere near 3%. I think if we get anywhere near 2.5%, it gets bad. And I think as we approach 2, I think the market's going to start freaking out. All right, so let's read a couple of these. What will rate hikes do on commodity prices? Now, Mike, again, traditional wisdom is that rising interest rates is deflationary, so it should bring commodity prices down. But there is just so much upward pressure on commodities right now. It's urinating in the wind. I don't know if that makes any sense. I don't see it making that big of a difference. All right, we got Cesare saying it's wet and mild here. Oh, you're in Scotland, Cesare. Okay, I did not know that. They're desperate to lock us down. Yeah, I know. More lockdowns. They'll try. My sister's cat guards my silver, says Cesare. That's interesting. I wonder if I can get a guard cat for my silver. I always say my lead and my brass protects my gold and my silver. I love metals. All right, what else we have? Crazy that less than 100 basis points move will crash the whole thing. I agree, Nicole. It is crazy. I mean, especially because, look, we're talking about 2% interest rates. I mean, historically, that's nothing. 2% is basically free money, especially considering, what do we have, 7% inflation officially? But the other thing you'll notice is that this line goes below zero eventually. Eventually, the economy can tolerate no interest. Eventually, the debt pile will be so big that we can't afford any interest. So negative rates is coming. One thing or another. Either negative rates are coming or everything crashes. All right. Now, my personal opinion is that I think they should let everything crash. I think they should pull a Volcker. I think they should raise rates. I think it will cause absolute mayhem, and I think it'll be incredibly painful for a lot of people. But that's the only way to fix this problem. There's no way to dig yourself out of a 50-year addiction to easy money without going through some kind of painful withdrawal. And it's the only way the economy is going to get healthy again. I don't see any other way around it. And, we've been trying to thread the needle and tiptoeing around this subject for 40 years now. And you can see every time we've tried, we get near that purple line and something in the economy breaks. And the Fed rolls over and they start the printing press back up. And now we have this inflation problem and we're wondering why and what we can do about it. So, what else we have? I want easy money, says Neil Hahn. Neil, I'll take some of that easy money too. I am not allergic to easy money. I'll take the stimmies if they offer it, but it's still a bad idea. That doesn't mean I think they should offer it. When you walk that razor's edge, it's quite narrow, LOL, says Sarge. Very good, Sarge. I agree with that. All right. So with that, I want to talk a little bit about cryptocurrency because crypto has had quite a lousy couple of days. Let's put a one-day chart on here and let's zoom it out a little bit. Okay, this is going back about a year. Make sure you guys can see. Oh, we got to get my big fat melon out of the way. Here, let's put me up here. So Bitcoin broken down. We're at about 47,000 right now. Not a very good looking chart, to be honest with you. We broke down below that all-important 200-day moving average. That is a bad sign, especially because we have now retested that 200-day moving average and failed to recapture it twice. It has been a very bad couple of days for crypto, folks. All right. Now, let me give you my crypto disclaimer. I don't try to time the market with Bitcoin. I make regular purchases. I dollar cost average in. All right. I am playing the long game. My philosophy with crypto has always been to zoom out and wait, set it and forget it. All right. And I'm going to keep doing that. As much as I hate to see the price crashing, I was much happier at 69,000. That being said, I will gladly take a little bit more at 47,000. And next week, if we're at 46,000, I'll take a little bit more. Again, I think when you zoom out in the long run, it's not going to matter. And if you think I'm kidding, look, here's that crash back in 2000 and we're going to have to set this to a 1 month candle. Let's zoom out a little bit. All right. Look at that crash in 2017, 2018. It barely shows up on the chart. Let's make it a week. Make it a weekly. It's a little bit smoother. All right. Here was the big crash last time, right? And it stunk to watch that. It took a couple of years to recover. But look where we are right now. We're talking about a crash now, and we're still, triple the top of last time, or 2.5 times that top. And we've got 2 more halvings this decade. 2024, there's another halving. 2028, there's another one after that. And the inflation problem and the debasement of fiat currency is only going to continue. I realize that the Tether story is still out there, and anybody who's investing in crypto, you need to understand that Tether could go at any moment. And when Tether goes, I think there's going to be a big sell-off in Bitcoin and Ethereum and everything else and all the dog coins and all that stuff. But I think in the long run, this story is intact, and I am going to ride out this storm for the next couple of years and see where I wind up in 2030. So, we're seeing the same thing in Ethereum. I don't get involved in altcoins. I know there's the SHIB army out there, and a lot of people swear by some of these other ones. I've had a lot of guys mention XRP. Honestly, there's just too many things to research in any given day. I stick to Bitcoin and Ethereum. They're tried and true. Bitcoin and Ethereum survived the last crash. I think they'll survive the next one. A lot of these other altcoins that were big this time around, back in 17 and 18, a lot of those are gone or never came back. So I think a lot of the ones that are big this time may end up not coming back from the next bear market. So I'm not going to say it's all over for crypto just yet. But again, when you look at that, well, Ethereum is still above its 200-day average, so that's not so bad. But for Bitcoin itself, technically, that chart is very ugly looking, folks. So, again, I that 200-day line worries me. We've been below it before. It's not the first time. And I'll also mention, I've said this before a lot, my dollar cost average, I use an app called Swan. I did put a link in the description. That is the only affiliate link that I use right now because I use this myself and I trust it with my own money, and therefore I feel comfortable recommending it to you guys. If you use that link and sign up, you will get $10 in free Bitcoin. And again, full disclosure, that is an affiliate link. That's about all I have to say about the Bitcoin. Now, I want to talk about something that I saw. Somebody drew my attention to it today. It was posted in Wall Street Silver. And this is from Mr. Ted Butler over at SilverSeek. And I was just researching this like a few minutes before this stream started, so I'm a little rusty on this. But I want to draw your attention to this. What he basically said is another stunning OCC report. And the OCC report it's a report of the derivatives exposure of all the big banks. And it zeroes in on precious metals. And I highlighted this paragraph here because this is where I think the important one. As of September 30th, now this data is for the end of the third quarter, hence September 30th, JP Morgan's share of precious metals derivatives had dropped to $27.6 billion, down from $38.3 billion on June 30th. At the same time, Bank of America's holdings as of September were $18.3 billion, up $10.2 billion from their June 30th number. As recently as 2 years ago, Bank of America held no OTC derivatives positions in precious metals. Other key findings in the new OCC report were the emergence of Goldman Sachs as a precious metals derivatives $0.9 billion holder. All right, so what he's saying, there's been a big change. It looks like a lot of silver was sold from JP Morgan to Bank of America. Okay? Not that big a deal, right? The bank's moving silver around, I get it. But he did a follow-up article to this. And the follow-up article was very interesting. All right, he says, more serious than I thought. I just want to read you a little bit from Ted Butler's article here. I'm taking the unusual step of publishing a follow-up article to my recently posted public article on the recent stunning OCC derivatives report. What prompts this more serious turn on my part was a question from a reader of my public article who asked me if I thought he should transfer his securities held at Merrill Lynch, yada, yada, yada. There's a lot of stuff here. What he says is, I had speculated roughly a year ago that 300 million ounces of silver had been deposited from either ETFs, primarily SLV, and that my guess was that the physical metal inflow was the result of JP Morgan leasing this silver to an unnamed third party. When the OCC report for December 31st, 2020 came out, released at the end of March, since the $8.3 billion suddenly reported for Bank of America when divided by silver's year-end closing price of $26.50 equaled 300 million ounces. It was a confirmation of my original speculation, closer than I could have ever imagined. So about a year ago, it looked like Bank of America had leased $8.3 billion of silver from JP Morgan and then sold it. In other words, they had shorted silver. Now he says, here's the problem. When using that same formula, dividing the September 30th holdings of Bank of America of $18.3 billion in the new OCC report by the 22.20 closing price of silver that day, the result is more than 800 million ounces, not the 500 million stated by me on Sunday and in yesterday's article. I confess to using the 500 million ounce amount because 800 million ounces sounded too high to me, and I reasoned that maybe some platinum and palladium was in the $18.3 billion figure listed in the OCC report. But who the heck am I to take such allowances? I didn't make such allowances when B of A's holdings were $8.3 billion as of December 30th, and I can't come up with any good reasons to do so now. All right, so first of all, these OCC reports, when they say precious metals, they strip out gold. Gold is reported elsewhere. So this is either silver, platinum, or palladium that Bank of America has this $18.3 billion position. All right, and here is the report that he's talking about. This is on OCC.gov. All right, and right here is Bank of America, total derivatives, and I'm guessing this, right? All maturities, this $18,266,000,000. There's the $18.3 billion number that Ted Butler is saying. What he is theorizing is that Bank of America leased all that silver from JP Morgan and then sold it. Remember, JP Morgan, that's your custodian for SLV, and that's the largest holder of silver in the world. That could mean that Bank of America owes 800 million ounces of silver. Now, I just want to throw the rider in here that this is a net position reporting. All right, this is not a net. This is a gross position reporting. All right, this could be the sum of longs and shorts. So all 18.3 billion may not necessarily be a short. There could be some longs in there. All right, but we've seen the banks almost always have a massive net short position in silver. But Bank of America owing 800 million ounces of silver. Remember, global silver mine production is less than 1 billion ounces. So Bank of America alone may owe a whole year's worth of silver mine production. I mean, that is a massive net short position. Now, this would be derivatives. This is not counted in the COMEX commitment of traders report. So this is off of the COMEX. This is the banks leasing it back and forth between each other. So I apologize. I may have butchered that commentary a little bit because I didn't really have any time to study this too closely or too much in depth. But this is an interesting story, and it's worth keeping an eye on. Now, these are quarterly reports that come out, so we can only check every 90 days. So it's not like we check back every day and we're going to see something here. But that, if Ted Butler is right, and that is a newly opened short position by Bank of America, that is some serious upward pressure on the price of silver. And again, that could also include platinum and palladium, but the size of the market for platinum and palladium compared to silver is, maybe there's some platinum and palladium in there, but it's nowhere near a major percentage of that 18.3 billion. So I forget who it was that recommended that story to me, but thank you very much for posting that. I was not aware of it before about an hour ago, so thank you guys for that. All right, going back to some of the comments. What will happen as CCP is telling foreign investors, F you, foreign bonds will be ignored, it seems. That's correct, Sarge, and I can tell you my foreign dollars will never get anywhere near any investment in China. And I think the more the CCP does this, the more they screw their foreign investors. I think they will find that they no longer have foreign investors to screw. That's what happens, right? When you screw enough people, they go away. They stop showing up. And you're starting to see that with these yields in the Chinese junk bond market. People are demanding higher and higher payouts to make loans to these Chinese companies because there's now more risk, and the price of the loan is commensurate with the risk. So they're shooting themselves in the foot by screwing their foreign investors. Maybe China thinks they don't need foreign investors anymore. I don't know. I apologize, guys. I'm fighting a little bit of a sore throat. Maybe I got that Unicron thing going on. I have the oil variant. It could be. I don't think so. But. All right. What else we have? Oh, my goodness. Look at all these. Seems bigger than something as simple as 100 basis points. Prepare people. We have to work to do 2022. Blessings to you all. Metals will be king during this collapse. Inspector Jason, excellent comment. I agree. The base of Exeter's pyramid, right? Gold, and we'll throw silver in there. And at the very top of Exeter's pyramid is unfunded liabilities. So all you pension holders, you Social Security folks, remember that is the weakest, the least secure on the pyramid. Tether could be embroiled in the Epstein saga. Papers coming out January 3rd or about big names named. Sarge, I hadn't heard about that one. That is interesting. Do me a favor, email me a link if you have it to that. I would love to read that one. Tether has a 30% stake in Evergrande from what I hear. I hadn't heard that one, Neil. I had heard that Tether has $30 billion or up to $30 billion worth of Chinese commercial paper, but we don't know who it's with. They say they have no Evergrande, but what Tether says and what is true don't always overlap. Did I put that mildly enough? I don't know. XRP is the best. I just don't know XRP that well, guys. I can't make a call one way or another. I'm sorry. There's too many cryptos out there to keep track of. All right, what about Deutsche Bank? Will they collapse? Will they get their money back from Evergrande? I don't think any of the foreign institutions are going to get their money back from Evergrande. I don't know if that would be enough to collapse Deutsche Bank. Deutsche Bank is huge. But I know when it comes to derivatives exposure, like total derivatives exposure, both the sum of all your longs and all of your shorts, Deutsche Bank has the most derivatives exposure. I believe, I have to verify that because that was an old data point, but I believe they have the most derivatives exposure of any bank in the world on a gross basis, certainly of any European bank. So if the GSIBs were to be at risk, I think Deutsche Bank would probably be the first to really have trouble. But again, that's based on old data. I haven't studied that one that closely anytime recently. And with B of A having 800 billion ounces of silver in the hole, if that's true, God, put B of A at the top of that list. I keep saying all eyes on Deutsche Bank. Sarge, I noticed you misspelled Deutsche Bank there a little bit. That's interesting. They're the biggest in derivatives. If the CCP tells foreign investors F you, Deutsche Bank is going to fall. That's kind of where I was going with my comment before. So I guess you just verified my assumption that Deutsche Bank had the most derivatives exposure. Hello, Rusty Benhammer. Welcome back, sir. Closing in on 3,000 troy ounces. Am I a silver whale yet? Wow, that is an impressive stack, Rusty. I don't know. What is official whale status? Who can tell me what official whale status is? I am not the arbiter of whaleness. Sorry. I can call you a whale. You're a whale to me, Rusty. How's that? You're all melon whales. Melonhead whales. Sure. That's my thing. I'm sticking to it. I would never allow a private company to be the money of a country. That's just stupid. It's a fair point, Neil Hahn. Although, isn't technically the Federal Reserve Bank, aren't they technically a private entity? And don't they basically control the money of the U.S.? So I would never allow it either, but I think we being the U.S., being the world, we have already allowed that. Funny how that works. We'll never know how bad the bank balance sheets are, but my guess is that they are very bad ever since 2008. I agree, Rusty. Banks have big for decades now. Banks have been in big trouble for decades now. Yeah, I worry about that gross positioning. The way the banks report, if you're net long $101 and you're short, if you're long $101 and you're short $100, the bank reports $1 net on their balance sheet. Well, what happens if that $100 short isn't paid because the counterparty goes belly up on that bank? Well, now the bank just lost $201. So off of their $1 on their balance sheet, I've always worried about that reporting of derivatives and the counterparty risk. And if Evergrande sets those dominoes off in China and the financial institutions start going down and it spreads to Europe, I can see it spreading to the States from there. And that's when counterparty risk just blows the whole thing up. so countries won't do business with them. China makes everything we use. LOL, that should be fun. Yeah, Sarge, I mean, China is the world's factory, but you're already starting to see it. I get comments from a guy, I won't mention his name, but I have a viewer who is in the process of moving his manufacturing capacity out of China, because it's getting more expensive, because the government is getting more heavy handed in their regulation and their approach. So, you see a lot of companies are moving into Vietnam and Malaysia and Singapore out of China. I think China's days as the world's factory may be numbered. All right, because what they're doing, number one, screwing over their foreign investors, with what they did with some of these IPOs, where they IPO'd in the States and just stole money from American investors, and then took their ball and went home. I don't think companies are going to put up with that forever. I think people are looking to get out of China in a hurry. And now we've got shortages everywhere. We can't get the stuff off the boats. We can't get the stuff on the trucks. We can't get it to where it needs to be from China. So globalism is failing right now. This global neighborhood, or whatever, the outsourcing, it's all breaking down right now. And I did some articles or some videos about how the food exporters are starting to hoard food. Argentina is cutting off on their corn and their grain exports, and they're doing it to keep food prices within their borders lower. They're banning the exports. Ukraine is considering that. Those are the fourth and fifth largest food exporting countries in the world who are reducing exports to try to keep their own food prices down. All right? That's globalism starting to break. All right? That's the haves saying, screw you to the have-nots. Good luck to you. We're keeping our food for ourselves. And what's China doing with their fertilizer? China's worried about their food security, so they stopped exporting any fertilizer. And then Europe couldn't make it anymore because of the energy prices. And then in the U.S. here, we had the Hurricane Ida rolled up the Mississippi River Delta and damaged the fertilizer production. So everybody's hoarding. All the countries are holding back. And globalism isn't working. In times of surplus and when there's abundance, globalism works great. And then as soon as things get scarce, everybody stops cooperating, and it gets ugly real fast. So, we learned last year, all of our medicine being made in China, probably not a good idea. All of our PPE being made in China, all those N95 masks being made in China, not such a good idea, was it? So I think you're going to see a lot of that manufacturing is going to come back. I think it has to. It has to. I mean, we risk catastrophe if we don't. So the derivatives are going to kill the system. As a matter of fact, the fractional lending system is a derivative of debts. Multiply that with some silly commodity shorts financed by that, and boom. Mike Binder, that's a very good point. I mean, we've got, what was it? The Bitcoin futures ETF. That always cracked me up. A Bitcoin futures ETF. It's a derivative of Bitcoin. And that was the first thing that Wall Street approved. That was their safe way to invest Bitcoin, was a derivative of Bitcoin, not an actual Bitcoin ETF. So leave it to Wall Street to take something that's good and pure and pollute it with their filth. But whatever. I just call them like I see them. Problem is, most Americans, like my wife and family, won't know what to do if their dollars are useless. Adams, I agree with you. Nobody alive has ever dealt or been through anything like that. And it's messy when a dollar takes trust out of the equation. You can go to a store that's run by a total stranger and make an exchange, and there's no trust involved. I give them the dollar, they give me the stuff. We know what's worth what. Problem solved. If the dollar goes away, now how is that exchange made? What are we doing? Are we bartering? Are we going to pay with gold and silver? I don't know. We can speculate all we want till we're red in the face about what a world like that looks like, and I think it's a pointless gesture. The best you can do is prepare yourself. A whale's at 300 ounces. That's a whole lot of silver. Most have none. I think he said it was 3,000 ounces, Sarge. But yeah, 300 is a lot of silver too. 3,000. I'll give you whale status for 3,000. Taiwan and India will reap the benefits. I wonder why you call out those two in particular. That's interesting. Oh, you're saying of China's manufacturing collapse, Taiwan and India would reap the benefits. I could see that. That makes sense. Hey, nobody, awesome content, man. Happy New Year from Israel. Happy New Year, Beach Boy. Thank you very much. Appreciate that. I love these messages from all over the world. Uh, I always have to forget because I've only ever left the U.S. for a couple of weeks in my whole life, right? I've spent very little time outside of the U.S. I don't speak any foreign languages. It'd be hilarious if I tried. So I forget, I say we all the time and I talk as if, my whole point of view is from the United States. And I forget sometimes how many of you guys, more than half of you guys, are not from the United States that watch this channel. I'm trying to police my own rhetoric a little bit better than that because I know there's a lot of you from the UK and Australia and Canada. Now Israel, I've had Malta, Germany, France, all over the place. Anyways, it's great. It's a good feeling to know these videos are reaching out that far. The hoarding of commodities is the beginning of hyperinflation. That's a good point, Rusty. That's a good point. And boy, that's my biggest concern about 2022. Besides the thing with the interest rates and the chart that I showed you with the 10-year Treasury, I do worry about that an awful lot. But the food prices, that scares me. The energy market's causing a food shortage. I find that very, very scary. Not just for my own life. Here in the States, if food prices go up, for most people in the U.S., it means one less vacation. Maybe we don't go to the movies as much, or maybe we eat home instead of eating out as much. But in other parts of the world, it's a difference between life and death for a lot of people. So I really hope it doesn't come to that. I really hope I'm wrong about this fertilizer thing. But time will tell. We've gotten some relief with the natural gas flows in Europe. The warm weather set in Europe. And with the warm weather and with the arrival of the LNG cargoes from the U.S., it seems gas prices have come way in. So maybe the fertilizer plants in Europe start up again soon. Hopefully. I check every day. I haven't seen it yet. So, and Beach Boy, sir, thank you very much for the super chat, for supporting the channel. Again, Happy New Year. And I really appreciate that, brother. Thank you. How is the bird flu in Israel? That's interesting, Neil Hahn. I didn't make that connection right away, but that's a very good point. Beach Boy, could you tell us anything about the bird flu situation going on in Israel? I saw a couple of videos that they were killing, was it millions of chickens to try to contain the spread of this new virus? From what I read, it was not a concern with humans, that it was very difficult to transmit to humans, that it was basically bodily fluid contact is the only way. It's not airborne or anything like that. And don't ask me how you make bodily fluid contact with a chicken. What you do in your own business is not my business. But that did seem like a big deal, and that could have an impact on food prices also. Chicken and eggs, obviously. Neil Hahn says, oh, that was the same comment. Felipe Fontes from Brazil. Excellent. Hello from Brazil and Happy New Year. Melonheads gone international. That's right, Rusty. Much love and respect. Back to you, Cole Marsh. Thank you. Already manipulated. Look at the volumes. Nobody needs ETF or futures to this proportion for real assets. Yeah. My pantry is looking mighty fine. Lots of baked beans and chili, says Cesare. I'm a big fan of the beans and chili myself. That's a good topic to mention. A little bit of food storage, folks, goes a long way. All right, consider that like a dollar put. Buying a little bit of extra food, some non-perishable stuff, dehydrated or whatever. You don't go out and buy a bunch of unhealthy crap that you're never going to eat. But if there's something that is a staple that you eat on a regular basis that has a long shelf life that you can stock up on now ahead of whatever's coming next year, it's probably not a bad idea. Don T77, Happy New Year, Jack, and everyone. Thank you, sir, for the super chat, and Happy New Year to you. You answered all my questions for this year. Thank you, sir. You flatter me. I'm very much looking forward to meeting you in Denver. And once again, thank you for supporting the channel, sir. And also the king of money himself, Dumb Money Media. What do you think of Mexico making a CBDC in 2024? Will the U.S. front run them and make theirs sooner or later, or will it force the U.S. to do it sooner? Dumb Money Media, sir, thank you for the super chat and for supporting the channel. I did see the article about Mexico and their CBDC. I didn't get into the particulars of it. I didn't get a chance to read the whole thing. That just came out today. I am terrified of CBDCs. Let me just tell you that. I absolutely loathe the idea. All right. Take everything that is good and pure and innocent about Bitcoin, and then you put the filth of central banks into it, and you call it CBDC, and you act like it's this Bitcoin derivatives. No, it goes against everything that cryptocurrency stands for. Satoshi, whoever he, she, they are, would be rolling over at the thought of central banks controlling cryptocurrency. And, we've seen with Soleil Amarova, who was the president's nominee for the control of the currency, what their idea of programmable money looks like, how they could just directly deposit or withdraw from our accounts whenever they see fit. Or they could program our money to say it's only spendable on things that they like. They could institute rationing just by programming our money and say, no, you bought too much food this week. You're not allowed to have any more. Or you bought too much gas this week. You can't buy gas until next month. All right. That's the kind of crap that is going to happen with CBDCs. All right. Every single person in the world should be resisting central bank digital currencies with every fiber of their being, with every ounce of strength that they have. With all my heart, no, do not let them do that to the money. Do not play. Don't use it. If they want to create their little digital dollar, don't participate in that system. Barter, silver, Bitcoin, whatever. Stay out of it, folks. There is nothing good down that road. Trust me. Trust me on that. And my God, you guys are awesome today. Thank you, Robin RC Models, Mr. Mike Binder, for your super chat, for your support of the channel. Happy New Year, Jack. Live long and prosper. I'm going to try to do it. I can't do it. I can't do it, Mike. That's the best I can. That's as Vulcan as I get. Sorry. No, it doesn't work on here. I don't know if any of you guys can do the live long and prosper, but thank you, sir, very much for the support of the channel. I appreciate it. And Inspector Jason, you as well, sir. Thank you. Nobody special. Happy New Year. Let's get you to 50,000 subs first quarter of 2022. Yes, 50,000 in first quarter of 2022. From your mouth to God's ears, my friend. So, everybody on this chat, there's 73 of you, everybody who's watching, go out and get me about 700 people and have them subscribe to my channel. That's your homework assignment between now and the end of, what did you say, Q2? By the end of Q1. Ambitious, sir. By the end of March. I want 700 from each of you. Hey, if YouTube wants to take me to 50,000 or 50,000 people want to subscribe to my channel, I will not stand in their way. I would love that. I like watching the subscriber count tick up. I'm not going to lie. It feels good to see, a couple new ones rolling in every day. And if you're new to the channel and you're watching this, welcome and thank you for subscribing. But I am having a lot of fun doing this. I want to keep doing this. So thank you guys. Everybody who's sending me super chats right now, thank you very much for that. Really appreciate it. Sam, Happy New Year, Jack. It's a pleasure watching you. Great information. Thank you. Thank you very much, Sam. That was very awesome of you, sir. I'm assuming it's a sir and it's not Samantha. But thank you very much for that, for supporting the channel. Guys, you guys rock. I can't even keep up with the comments right now. They're coming in so fast. I have glass bottles of olive oil, but it's getting expensive. Cesare, olive oil is one of those things that, if we ever get into like an absolute collapse, like currency is worthless, olive oil is one of those things that will be easily bartered. So that's not a bad thing to have piled up around the house. I accept silver as payment for my labor. Who would not, Neil? If somebody wants to pay me in silver, I wouldn't stop them. I would gladly accept silver. I'd even give them a discount for silver because right now you got to pay a premium in shipping to get your hands on any physical. So yeah, I should put that in all my Facebook Marketplace listings and everything. I'll accept silver also. King of Money again, Dumb Money Media, sir. Thank you. Sorry I can't meet up. Next year will be easier for me, though, after the move. Come on Schiller's Corner. You'll get 7,000 subs instantly. Thank you, sir. Thank you very much, and good luck with the move. Sorry I can't see you in Denver, but something tells me we're going to be doing this on the regular. I can't wait to go to Denver. It's going to be really cool to meet some of these guys, to see them in person, and it's going to be great to meet some of you viewers out there, to put faces on the names. That's what I'm most excited about, because right now, you guys, I'm watching you scroll through in the comments here as we're talking. There's a picture there's an icon, a handle. Some of you have your faces in the name, and then you've got your name, but there's that, and then there's meeting in person and actually sharing a drink and talking for a little bit. I'm just really looking forward to that. It's going to be a nice event. It's going to be about 4 hours long. And, the bar doesn't close after that 4 hour window. It just opens up to the public. Something tells me we're going to fill the place up anyway. So it's probably going to go on even longer than that. So I'm looking forward to that. Me and Mrs. Special are going to be out there. Let's see. 2022 is going to be explosive. I agree, Sarge. I work for Silver as well, says Rusty Benhammer. Very good. Nobody Special Finance. The Denver meetup will help. When the other YouTube content creators put stuff on their channels, your subs will grow. I hope so, Cesare. I've been doing a lot of that lately. I did a video with On-Site Trav last night. The day before that, I did one with Financial Fitness and Economic Ninja and Ironsides Ranch. That was a really good time. That's on the Financial Fitness channel. I have a video going up tomorrow that has an interview with Chris Taylor from Financial Fitness. So I'm meeting a lot of cool people doing this, a lot of interesting cats, people from all different walks of life, from all over the country, all over the world. I did the one with Mario and Echo. He's based over in the UK. So this has just been a real interesting experience, my YouTube channel. I'm having a lot of fun doing this, and I want to keep doing this. So let's see what Morgan says about crypto. We talking about Dan Morgan? That's interesting. See what he says about crypto. I'm down to work for Silver. I'm way too broke to hold a normal job. I am also down to work for Silver. I will gladly accept my pay in metal. In Denver, you should have a video live. That's not a bad idea, Neil. I have to see what the noise level is going to be like in that place. I have a feeling when you fit a few hundred people into that bar that the noise level may be prohibitive at the actual meetup. But I'm going to be out in Denver for a couple of days, so what I'll probably end up doing, I'll be hanging out in the hotel lobby, stuff like that. I'll probably be looking to catch some of these other content creators as they're coming and going, and maybe I'll do a live stream from the hotel or something like that. I want to go out there. I want to get a mountain of content. Hopefully I've got videos for days and days and days after this event. So I'm making lots of room on my hard drives and everything. I'm charging all the batteries, packing everything up. So I have high hopes for this trip. And I tell you, Ninja did this one in Dallas, and I was trying to go to the one that he did in Dallas back in August, and I couldn't get arrangements made for my kids in time, and I missed it. And man, I was kicking myself for missing that because I saw all the videos these guys did together, and I was just saying, Jack, you should have been there. You should have been there, nobody. But I couldn't make it. It's tough when you got little ones. I know some of you guys got little ones out there. You know what I'm talking about. But Grandma really stepped up this time. When I was at Grandma's this week, I hit her up for some childcare, and she came through big. So Pop, Grandma, if you're watching, thank you very much for watching the ladies so I can go out to Denver. I don't know. They might be watching. We're about an hour and 15 into this stream right now, so if they are still watching, they're probably making dinner while they're watching, maybe not paying attention as much as they should. That's right. I still love them. David Morgan series on crypto conspiracies. Go watch Insane Info. Okay. That is going on the list, Sarge. David Morgan crypto conspiracies. I'm writing it down. I got a lot of these, man. There just aren't enough hours in the day. I have a lot of articles and videos I need to consume. And it's surprising. You guys would have no idea how much research goes into doing this. I mean, it takes a lot to scour the web for news or for data points or for charts or information or patterns, and then to gather enough information to actually feel confident enough to put a video together, and be willing to stand by it. I don't want to put crap out there. I don't want to put out misleading junk or anything like that. So, it's very time consuming. A lot of research goes into doing this, a lot more than I thought when I initially set out on this. I was surprised. And then on top of that, the time it takes to film, to edit, it really is time consuming, believe it or not. Even just to put out a 15-minute video every day, you'd be amazed how much goes into it. GNU Engineering, I just saw this. Now I'm late. That's all right. I think there's room for you here, so no worries about being late. It happens to the best of us. Most suppliers pushing costs up 10% at the beginning of the year. How long can they hold on to CPI without overt emergency measures? Scott, I hadn't seen that data point, the 10% at the beginning of the year. That's a big one. And I tell you, I've been saying it for months. Since this summer, every month I do my CPI preview video, and every month I say the rent has to hit CPI sooner or later. Because if you look at CPI, they're saying the rent has only gone up 2.5% year over year. Well, that is some straight up horse manure. All right. That is straight up organic fertilizer. There is no way the rent has only gone up 2.5%. I own my house, and my mortgage payment has gone up more than that because of my property taxes this year. All right. And I don't even charge myself rent. It's just my property taxes going up. There is no way the rent has only gone up 2.5%. Much more than that. All right. And that's the biggest input to CPI. All right. The owner's equivalent rent is a quarter of the index. And that should be at about 15% right now, not 2.5%. So we have some big CPI numbers in there. Ah, there he is. There's Pop Pop. He says we're watching. I won't call him out. But thank you very much. You can see everybody is talking about Denver here. My child care experts who have stepped up so I can go to Denver. Oh, it's okay, Jack. Glad you can go to this. You can go this time to make some videos. Yes, sir. I am very happy to be going. Morgan report on YouTube. Okay, I have seen David Morgan, but I haven't seen his crypto conspiracy videos. So I will be checking that one out. When do you think we'll have a negative quarter? Hello, Devin. Oh, on GDP. When will we have a negative quarter on GDP? Yeah, that's tough to say because are we talking real GDP? I know you called me out on that one not too long ago. If the inflation numbers stay up, that's hard to say. I would say probably still looking at positive GDP next quarter and probably second quarter. So I'm going to venture a guess that at the earliest, third quarter of 22 would be the soonest we'd see negative GDP growth. All right. Now, that's me assuming the bubble pops sometime mid-22. If we see the bubble pop in mid-22, that it might affect the second quarter numbers, but probably not because it would probably happen late second quarter, maybe even early third quarter. And then, I tend to be early also. So, like, I sit in disbelief at how long these markets can stay irrational. That famous quote about irrational markets and your solvency. So, I mean, we could have positive numbers all through next year, but I'm going to stick to it at the earliest. We won't see a negative GDP print until the third quarter of 22. We'll have to revisit that one. That's an excellent question, Devin. You made me think there a little bit. Good evening, Grandpa Special from Cesare, England. Is it Cesare, England, or is it Cesare? Or I don't know. How do you spell pronunciation? But I hope I'm saying it right. Cesare. I always call you Cesare. I don't know if I'm making myself sound, like your typical linguistically ignorant Yank who doesn't know how to pronounce anything. Rents up 30% in Los Angeles, says Inspector Jason. Wow. I've seen some high numbers, but 30%. And that's in Los Angeles. That's in the city and the state that everybody's leaving. Can you imagine? And I think Phoenix, Scottsdale, Arizona area is probably seeing the biggest numbers because that's one of those cities that people are just flooding into. I wonder what those numbers are. Owner's equivalent rent is designed to mask housing costs, and that's exactly what it's doing, Karen Shea. It's an excellent point. I don't understand how they do that. And all of these meetings that we have with the people from the BLS and all these congressional hearings, how come no congressman or senator in their 15 minutes of fame, on the news, how come nobody has ever called out owner's equivalent rent and said, how about we get a real statistic in here? Nobody ever. Anyway, it deserves more attention. Because remember, they use CPI. I mean, that's what they use for cost of living adjustments, for payouts to Social Security, and for people's pensions, and for everything else. So I think we are owed better statistics. Devin, thank you for the kind words, sir. I can't read it. Otherwise, I end up with profanity, and the algo punishes my live stream. But thank you very much for the kind words. Myshnra. I don't know how to pronounce that. Is Mishna? Mishna? Says, holy smokes, is it cold outside? Where are you guys that it's so cold? Because it is getting colder in the States here, and it's getting warmer over in Europe. And my buddy JC from Weather NJ, if you're watching, you need to come on the channel and talk to us about the weather, because weather is so important to finance. But that is having a big impact. Europe is saved by the weather, man, that's for sure, because those prices were heading straight up, and now they're coming down just as fast as they went up. Devin says, I like your prediction for Q3. Thank you, sir. China Olympics plus New Year leads to material shortages leading to second quarter. Okay, we have a second quarter estimate for negative GDP growth. That's interesting. 2% higher in inflation, and we're there, right? That's right, Devin. I mean, we got a 2% print, and they said it was adjusted for inflation, but adjusted for their inflation, which we all know is understated. Texas is up like 200%. Is that the rent number, Rusty, that you're talking about? Home prices here are at least 150% this year alone. What do you think is the most underrated metro area in America based on quality of life versus cost? Devin, I'm probably the worst person in the world to ask that question. I am a suburbs boy, and I absolutely hate the city. I can't say that strongly enough. I do not like cities. I'm going to go to Denver to meet you guys, all right? Because I like these people, the people on my channel and the YouTubers. I like certain people. I don't like millions of people crammed into little concrete boxes. So I've never been big on cities. I'm an outdoorsy kind of guy, even though I sit in front of a computer most days now. I used to be an outdoorsy kind of person. So I couldn't tell you what. I'm the worst person in the world to ask about a good metro area. I can tell you I know a guy who moved from New Jersey out to Scottsdale, a young guy, and he loves it out there. He absolutely loves it, and it's an up-and-coming area. And a lot of these big tech startups and these companies that are being chased out of California by the high prices and by the living conditions and the human excrement on the streets, that they're flooding into the Phoenix, Scottsdale area, and they love it there. So just based on that data point alone, and I know they're one of the highest rising rent markets, that seems to be where people want to live. All right. Of course, in July, when it's 125 in the sun, I don't know if you'd want to be there. But I'll take 125 in the sun over minus 10 in the wind in January any day. Cheshire? Is that what? Cheshire? I'm trying to pronounce it. I'm sorry, but I really like Cheshire. It makes me sound exotic, like a belly dancer or something. All right, Cheshire it is. And the king of money again. I know CPI calc is getting changed again. Do you think it will even matter? I haven't found any good articles yet on how the calc is changing. I am watching for that. They are saying, thank you again, Dumb Money Media, for supporting the channel and for the live chats, the super chats, sir. I have seen that they're changing the basket again. I haven't seen any color on what they're changing either. It's a good bet if they're changing it. It's going to be a conservative change. They're going to change it, and it's going to make themselves look better, because they wouldn't change it if it's going to make the problem seem worse. That's not how government statistics people operate. So whatever the change is, it's going to further suppress the inflation statistic. That's just me speculating there. I don't have anything to base that on other than empirical data and what they've done in the past. $500K for a crappy house with no yard in Cali. Sounds like where I came from in New Jersey. Although I came from a nice part of New Jersey. Yes, there are nice parts of New Jersey, believe it or not. There's a few pockets that are still left. But ever since I've come out to Pennsylvania, it's nice out here. I like it out here. I was lucky enough, I worked at a nuclear power plant, and the plant was closed. It was forced to close early by the politicians in New Jersey and their idiotic regulations. And when that happened, both me and Mrs. Special lost our jobs on the same day. So we were very fortunate to land on our feet. The company moved us out here. We found new jobs. We found a great house. We upgraded our house because we knew the plant closure was coming years in advance. So we were able to get ourselves in a nice place that has now gone way up in value since we bought it. So we got lucky. A lot of guys show up to work and have a pink sheet on their locker, and that's it. Good luck to you. So I guess I can't complain. But New Jersey left a bad taste in my mouth when they put us out of work. I was planning on spending the rest of my life there. That was home, but you know, world had other plans for nobody special. Man, it is at 4:25. We are going to do a couple more of these guys, and then we're going to wrap up. Man, these live streams are going fast. Real quick, I want to ask. I was talking to Mrs. Special about this, and she had recommended breaking up the live streams a little bit because I know they get kind of long. I mean, we've been going for an hour and 10 minutes now, and she was saying I should probably break it up and do it maybe a couple times a week, but do much shorter intervals. So, just curious, what do you guys think about that? If I were to do like, instead of one long stream Friday, do something like maybe Wednesday night, Friday night, a half hour each or something like. Just ideas, throw them out there. What do you guys think? Or I could do them on the weekends, maybe a Sunday night thing to start the week, although you never know. Just food for thought, guys. This is your channel too, so let me know what you guys like, what you think would work best for you. What happens to pension when MBS stops? What's the bid for dog shit bonds if the Fed doesn't buy? Nicole Post. Nicole, that's an excellent comment. I was thinking about this the other day, right? Think about this. You buy a house, right? You get this nice house, but you pay a bloated price for your house because the bank lets you borrow, and therefore the price rises because of what the bank lets you borrow. And the bank doesn't care. They'll give you the loan to buy the house because the bank is going to sell your loan into a mortgage bond the next day and get it off their books. So the bank doesn't lose any money if you don't pay. Well, who does the bank sell the mortgage bond to? Probably your pension. So the bank loans you money so you can buy a house, and then they sell that loan to your pension, so you're paying your own pension for your house. So what happens if you say lose your job and you can't pay your house? Well, you stop paying the bank doesn't go under. It's your pension fund that goes under. So not only do you lose your job, you lose your house, and you lose your pension. You lose. The bank is fine. They got paid already. So what was the original question about the bond? I kind of went off on a tangent there. What happens to pension when MBS stops? The same people who get screwed out of their houses, the same people who lose their jobs, also lose their pensions, and they lose their retirements. And that's why unfunded liabilities, the very tippy top of Exter's pyramid, the least reliable wealth, the most risk is in those unfunded liabilities. And that's where your pension lies, along with your Social Security. So be careful of that. If you're one of those folks who's like, well, I don't have any IRA or 401k savings, but I have a pension and I have Social Security, so I'll be okay. You are banking on somebody else being there for you. You don't know who that is. And if you're comfortable with that, it's up to you. I am not comfortable with that. So I take that matters into my own hands. I have my 401k. I do have a pension with work. I do have Social Security, although let's be honest, Social Security will be long gone by the time I retire, if I retire. And then I have my own investments, my home, my gold, my silver, my Bitcoin. So I try to spread out. I have as many irons in the fire as possible. So if one goes or two go or three go, I don't lose everything. That's the best you can do because they've created an everything bubble. Everything is overinflated. They have forced us to take risk, they being central bankers and the elites, where, if we do what Grandma Special likes to do, love you, Grandma, if you're still watching, she's the most responsible lady you'll ever meet in your life. She never spends money she doesn't have. She saves responsibly. She asks nothing for herself. She's all about her family and her kids. And the system we have right now is designed to take advantage of that mentality more so than anything else. The savers, the people who do without for the benefit of others to try to save up for the future, they sit with their money in the bank and get eaten alive by interest, while the crooks take risk with her money, lose it or whatever, overinflate the asset bubble. So that's why I am a very strong proponent of fixing the money. That's where this channel came from. That's why I was drawn to precious metals, to gold and silver. That's why I like Bitcoin and Ethereum. So anyways, Grandma, if you're watching, love you. Scott Dickert, sir, thank you very much for the super chat and for supporting the channel. Happy New Year. In your opinion, what will be the most important chart to watch in 2022? Repo, Fed balance sheet, 10-year. All right, Scott, I've said it before. I'm going to say it one more time. And thank you again, sir, very much for the support of the channel. For all you guys have been very generous today. Thank you very much. I really appreciate that. This right here, I've been saying this for a while now. This is the chart of charts. This is the one that tells all. The Fed balance sheet is important. All right, the reverse repo is important. Those, all those ones that you mentioned, those are also important charts, but this is the one. All right, if the closer we get to that line, the more likely we are of that everything bubble popping or some other minor correction or downfall. I mean, it's possible we have a minor crash and then we continue in this slowly downward path a little bit more for a couple of more years. Like we had that minor crash in 2018, and then they started printing money after repo madness, and then obviously we had that miniature recession with the unfortunate medical scenario that shall remain nameless. So it's possible we stay in this range for a couple of years. But if we go over this line, I will go with conviction short the S&P 500 and just about everything else. Because if we cross over that line, that's when everybody starts to freak out. And again, I just base that on every time we've gotten anywhere near it, something big has broken every time. So in my opinion, that is the chart to watch. I look at this one every day. It's one of the first things I do when I wake up. I check the 10-year Treasury. We seem to be a little bit range bound right now. Let's just zoom in a little bit on a one-day chart on this one. So we retook the 200-day average, kind of failed to retake the 50 here. So, we're kind of at that inflection point. But if you zoom out a little bit, it does seem like we have this upward baseline is intact, and this one goes kind of all the way back to the bottom here, after the unfortunate medical situation that shall remain nameless. So if you look at this baseline here, we're kind of following that track up. And that puts us crossing over that purple line sometime around July, August. Although we have those rate hikes coming. Those are going to be step changes up. So this baseline is going to steepen, I think, with the rate hikes. And those start right around mid-year. Could be the first rate hike could come in March, could come in June. It may come sooner because the Fed is increasingly hawkish with their rhetoric. Month after month, they're getting more hawkish every time they talk. So who knows by March what that's going to look like. So Scott Dickert, sir, thank you very much for the support of the channel and for the excellent questions. Guys, I think I am going to have to cut that one off there. I hate to do that because I am having a lot of fun doing this. But I have company coming over for New Year's Eve, and I have to get the bar and the basement ready. I have to get the movie theater ready for the kids. We have this little trick we play on the kids. I go on YouTube, and I get the countdown from last year on New Year's Eve, and I play it on YouTube, and I play it around 10 o'clock or 11 o'clock so I can get their little butts in bed early, and then the grown-ups get to have fun when the actual countdown starts. So I got to go get all that set up. And I have to do it before about a half hour ago. So I'm already late getting to that. Anyways, guys, I really appreciate all your comments, all your time watching. Thank you very much. Everybody who sent the super chats and supported the channel today, thank you very much. I appreciate that. You guys are awesome. I'm looking forward to meeting you guys in Denver. And that is in about 8 or 9 days. So it's coming. All right, guys. With that, we are going to call it. So until next time, live small and dream big.